Welcome everybody. It's great to see so many people joining this webinar. Now I've got Bruce Gleeson from Jones Partners Insolvency and Business Recovery. Bruce is a partner there. He's a registered liquidator and bankruptcy trustee, and he has over 25 years experience. We're also joined by Jason Cunningham, who is the founder, one of the founding partners of the accounting firm The Practice. And he's also an author of some excellent books, one of which I've read. And he is a media commentator and has regular appearances on Channel 10's The Living Room. So, Jason, it's your job to carry Bruce and I today, mate, okay?
Oh, yeah, I don't know about that, mate. How are you?
Yeah, good, mate. G'day, Bruce. G'day, Jason.
G'day, everyone. Hopefully you get some useful tips and information this afternoon, but I think we're all in an environment where there's just so much information to absorb. Even this morning, I know there's been sort of more releases overnight, so bear with us and hopefully you'll get some good tips today.
Yeah, that's right. So listen, Jason, now look, funnily enough, I'm working from home. I've been working from home for the last 2 weeks. So I've had more meals with my family, my two teenage sons and wife, in the last 2 weeks than I have, I think, in the last 5 years. But that's great. That's really good. I'm enjoying that. I noticed you two guys are in your office. How's that going, Bruce and Jason?
Oh, look, I think we're no different to any other business. We've had to learn to adapt pretty quickly. It hasn't all been absolutely smooth sailing, but look, I think we're managing pretty well. And I think the longer that we sort of stay in this sort of changed environment, that we'll continue to just fine tune it, and it will be pretty good.
All right, and Jason.
For us, we've probably got about 90% of our workforce, or maybe a bit more, working remotely. We were fortunate, and it's an interesting word to use in these times, but we were fortunate at the start of the year that we rolled out a piece for our team to have flexible work hours and working remotely. And so we were sort of geared up for it, which was great. So there's only 4 of us in here, 2 partners and 2 senior guys in here. And for mine, I've always had this longing for a strong segregation between my home life and my work life. Now that is going to get quite blurred should we have a full lockdown. But I'm just holding on to it as long as I can, mate.
So let's dive in. I've got a poll going at the moment. Working from home, who's enjoying working from home? Look, 69% love it. I would have to fall into the take it or leave it category. We've got 16% that hate it, and 5% about as much as the office. So Jason, look, before we get into, let me just get rid of that polling there so I can change this. Before we get, okay, now my slideshow is not gonna work. But anyway, there we go. That's working. Jason, I want to talk to you about business strategy. So you sit on a lot of boards. Your work at the practice is mostly about advisory and strategy. What can you say to the business owners out there that are going through this, something we've never been through before?
I guess I've been asked that question a lot of times, Jason. And the first thing, interestingly enough, I found myself being quite objective in this whole chaos that we're going through. And if I look back over the last sort of few weeks, I think it's come in 3 waves. The first wave was when we started to field a lot of phone calls in relation to the market. And the share market just got belted. It dropped 12%, 10%, 7%, and it popped up again 4 or 5%, and it got belted and belted. And I think the All Ords is off about 30%. Right? And so that first week and a half, we were just doing nothing but fielding phone calls from our clients and also looking at our own investments. And then the next part was when we all went a little bit crazy in the supermarkets, and we were fighting over tin cans of tuna and 2-minute noodles. I never knew they were that popular, baked beans, toilet rolls, all that sort of stuff. Then the third wave has been this position, or this feeling where business owners seem to be shouldering the load a little bit. And I spoke to a good client and a good friend of mine who's up in Sydney, and his name's Sean, and not the tallest bloke I know, but a good fella. And he said, Jason, he said to me, Jason, look, I reckon it's all about shouldering the load now, and I find that a lot of business owners are sharing ideas with everyone. They're shouldering the load. You take a bit of burden, I'll take a bit of burden. And I guess that's probably what the topic, and I guess the general theme of today is about, is how can we help each other out? Because, yeah, sure, we work in the financial services space, but we're all in business. Yourself, Bruce, and I are in business, and we're going through this like everybody else. And so when I have conversations with clients, I say to them, I think there's three things we need to focus on. The first is, what can I do for me, right? There's a saying, if it's to be, it's up to me. And we're in an environment where a lot of the things are out of our control. So number one is, what can I do for me? Number two is, what can the government do for me? And number three is, what can I do for the community, and what can the community do? Because never before have we had this reliance of being connected, even though we're all, it's like this crazy, it's almost like a dichotomy that we're all separated, and for the most part we're working remotely, yet we've never been so connected. I find it amazing.
Yeah, no, look, it is. You know, I've had more Zoom meetings in the last week than I have, ever. You know?
Yeah, and I finally got the software to work. And I think, Jace, the other piece is around the planning piece. You know, and when people say to me, Jay, how long is this going to last? I tell them, look, I don't know, but all the noise that's coming from our government and the politicians, all the noise is talking about a 6-month window, right? So a lot of the initiatives are 6 months long. And so when I talk to clients, we're talking about plan for the worst, but hope for the best. And so this planning piece is in two tranches. The first 6 months, and then post 6 months, the next 12 and 24 months. And so plan has never been more important.
Yeah, no, look, absolutely. But you know, like you say, not really long-term plans either. It's all about, the next 6 months.
Yeah, that's right. The present. Absolutely.
Yeah.
But also, Jace, also preparing yourself for once we get through the proverbial storm, once we get through that, when we pop out, it's giving our businesses the opportunity now in this 6 months to really re-engineer our businesses, streamline our processes, so that when we pop out for the better, and we're in a better position on the other side than we were before we entered into the desert.
Yeah. No, makes sense. So look, everyone, we're going to take a look at, as much as we can, we're going to cover all things COVID-19 to do with business stimulus guide. We've got a lot of business owners. We have a lot of professional services on board too. And let's rip into it. So I'm not sure if everyone can see the polls, but 57% of people love working from home. 9% hate it. I don't quite fall into that category. 31% can take it or leave it, and 6% about as much as the office. So JobKeeper payment. Bruce, do you want to touch on this quickly? I think most people are across this, but you just want to touch briefly on what it means for my business, for your business, actually definitely for your business as well, Jason.
Mm-hmm.
I think Jason was going to touch on JobKeeper.
Oh, yeah, no, more than happy to. So look, the JobKeeper subsidy was announced Monday afternoon about 4:30 by our Prime Minister, and it talks to a $130 billion package handed out by the government. It's been very well received, and the incentive or the motivation behind it was that the government understands that businesses are doing it really, really, really tough. But what the government's trying to do is enable business owners to stay connected with their employees, even if they are shut down. How it works is the first part of it is that the employer needs to pass an eligibility criteria. And that eligibility criteria is if you turn over less than $1 million, which most of the businesses on here are. I know Bruce is turning over a little bit more, but for most businesses on here, they're turning over less than $1 billion. If your income or revenue for your business has dropped by 30% or more, then you become eligible to participate. And that payment is $1,500 per fortnight or $750 a week. I'm confused as to why they went the fortnight piece, but maybe that's because a lot of Australians get paid every fortnight. So it's a $1,500 per fortnight payment, which is the best part of 40 grand a year. It's only for a 6-month window. To be eligible, you need to register on the tax office's website to register your interest. And that payment will pass from the employer through to the employees. Now, there's a whole heap of conjecture around it, and questions are starting to pop up, and there's going to be a whole heap of nuances in relation to it. But what we do know is this. We do know at the moment it's just a headline act, and it's just some commentary for the government. It will get through, but Parliament needs to sit next week for them to pass legislation. From there, legislation will go to the tax office, they'll interpret it, and then it gets rolled out. My understanding is that payments start on the 1st of May, backdated to when the announcement was. And so there's going to be a bit of a window of about a month or so where businesses are going to have to need to fund or cash flow fund their employees' wages. It talks to payment to employees, and so that's where some of the nuances are. And I don't know whether we should get into too much of the specifics on it, mate, because the legislation hasn't been passed. But the high-level piece is that first, the employer is the one that qualifies. To qualify, it talks to a downturn in your revenue of 30% or more as due to COVID-19 or the coronavirus, or should I say the financial impact of that. You register on the tax office's website, and then we watch this space for the next week or so as it gets rolled out.
Okay. Yeah, look, I think any more detail on that, you probably want to have a chat to your accountant. We've got some polling happening at the moment. The question is, do you expect your business to drop more than 30% in revenue in the coming months? 86% are saying yes, 14% are saying no. So that tells a very interesting story.
Jace, if I just could, for one quick second, I think the most important thing we need to understand, because there's questions around, is it my first 9 months of this year compared to my first 9 months of last year? Is it April compared to March revenue? All that sort of stuff. What we need to recognise is understand the motivation or the driver behind the government and why they're trying to do it. Because a lot of businesses out there whose March revenue hasn't dropped by 30%, but their April revenue will and their May revenue will. So the government has a strong incentive to enable employers to keep people employed as best they can.
Yeah. No, look, absolutely. So that's incredible. That's incredible poll. 87% yes, it's going to be affected. 13% no.
So Jason, that's pretty consistent too with the ABS stat that said about 86% of businesses were indicating that they were going to be impacted by COVID-19. So that whole result probably is pretty consistent with some of the ABS surveying.
Okay, yeah. So look, Bruce, I want to throw over to you now. We've got the next slide up, temporary relief for financially distressed businesses. You're all over that. You're an insolvency practitioner. Touch on that for us and what it's going to mean for Australian businesses.
Yeah, look, I guess at the outset, really these measures came on around sort of late March, around the 24th, 25th of March, this dialogue started. And really it was all centred around this deferral for 6 months. And Jason has already touched on a lot of the initiatives and stimulus are geared around this 6 month sort of period. And so really the lobbying was around saying, look, we need to basically recognise that businesses are in effectively survival mode, and therefore we need to give them some relief if they've got outstanding creditors and they need some relief so that they can't be actively pursued. And there's been a lot of talk around, rent, around key suppliers and things of that nature. And so that has sort of off the back of that where these changes have come from. Now, what are the changes? Effectively, and this is where it does come back to, the impact on the cash flow of a business, and that is that in relation to where a company might be owed monies by other companies, then the reality is that historically, what they've been able to do as a starting point in that process is issue a statutory demand. And the threshold limit for that statutory demand was $2,000. As at the 25th of March, it's now been increased to $20,000. And also the time period for complying or otherwise trying to respond to it has been increased from 21 days to 6 months. So you can see that they've very much sort of tucked into this 6 month sort of deferral period. And similarly with bankruptcy notices, again, so when an individual owes money, that threshold has also been increased from $5,000 to $20,000. And likewise, the time frame for responding or complying with it has also been increased from 21 days to 6 months. Now, just on those 2 points alone, that's likely to have a significant impact on how businesses deal with outstanding amounts due to them. So whilst they might be able to progress things like getting payment plans and aspects like that in place to try and make sure there's at least potentially some cash coming into the business, if they do have a debtor that basically is being a little bit difficult in terms of repaying that debt, then they're going to find that if they want to continue to press for that, they're going to be facing this sort of 6-month deferral period effectively. What I actually see happening there is that, and I know a lot of lawyers that I've already talked to are looking at saying, if it gets to that point, we just basically won't lodge or issue any statutory demands or bankruptcy notices until late September, so that then they're back to the 21-day period as opposed to the 6-month period. Because if you're recommending to a client issue a statutory demand or a bankruptcy notice on the 15th of September 2020, for example, you've still got to then wait the 6 months. Yeah. So you're going to see, I think, a lot of changes in collection activity during this period. And I guess my sort of advice practically is businesses should still do what they can, notwithstanding that change, even if it means payment plans with debtors, because at the end of the day, and it goes back to what Jason was saying at the start, everybody is in this together, and you still want to try and work out if there is a way to get cash into your business without, and recognising some of these deferral periods that have been put in place. The other thing that has also happened, Jason, is that as far as insolvent trading is concerned, and that's generally a concept that I guess is applicable when a company goes into liquidation, what the legislators have done is to say that there's a temporary relief for that for this next 6 months. So certainly if a company were to go into some form of external administration during this period, then it's likely that you'll get relief for that period. The big question that's talked about within our firm and with other lawyers that we deal with is that what we do need to be careful, and certainly business owners and company directors need to be careful about, is, well, whilst that temporary relief is there, if the business was already insolvent coming into the 25th of March, it still won't provide them with any protection in relation to that exposure at that point in time. So it is something that if company directors are wanting further information about, that they do seek out the right advice, because whilst these thresholds for 6 months are here, there's still subtleties that we need to understand, and they won't apply and fix every issue that is out there. So, and I think the other thing I'd say is that even the tax office, expect the tax office to go fairly slow during this period in relation to the pursuit of winding up proceedings, direct penalty notices. And the other message to business owners, and even for them to get in touch with their professional advisors, is if you want to defer or if you want to extend your lodgement periods, even the case note by the ATO this morning says they're not going to issue some blanket approval. They're going to do it on a case-by-case basis. So you really need to engage and get some proper advice there. And
Bruce, look, has this gone through legislation yet, or do we know when it's going through legislation?
That's the reliefs in terms of the 6-month and threshold limits for bankruptcy and winding up a company and the insolvent trading are law. And I actually expect, Jason, I was talking to somebody yesterday about further measures that are being discussed with federal government at the moment to also more fulsomely deal with some of the issues that businesses are going to be faced with over the next 6 months. So I think it comes back to this whole scenario where the landscape is continually evolving, and we need to make sure that we keep in touch with the right sources of information.
Yeah, absolutely. Jason, is there anything you want to add there before we move on?
No, look, the only point I was going to ask Bruce was is whether or not, Bruce, you can foresee creditors being a little bit more friendlier during the next 6 months, notwithstanding the point you raised about if you want to wind up notice, you won't do it until the end of September. But I get the general feeling and this is just through the clients that I've been speaking with over the last two or 3 weeks, I think there's this feeling or this notion that we're all in it together and people aren't going to be as harsh as they were previously. I think people are going to be in a position where they're going to extend credit terms. They're going to take a reduction in their bill because we've all just sort of started to work together. Can you see that happening? Is that what?
Yeah, certainly, Jason. I do agree that amongst what I'd call the usual creditors, the ATO, the banks, and some of the larger trade creditors, that you're going to very much get that.
Yeah.
And so the big question, and I think is somewhat still an uncertain answer to, is, okay, when this 6-month period ends, so later in the calendar year, will businesses automatically revert to a normal sort of collection activity, or will there still be a bit of a carryover of a bit of goodwill? But I think you're right that in this next 6-month period, I'm actually not suggesting that we're going to see a massive spike up in insolvency appointments in this initial period because of the very issues that you've just raised. I actually think that might come later. In the year, perhaps, depending on how things flow.
Yeah, cool.
All right, guys, let's keep moving along. Now, before I do that, I don't know whose idea it was to have 3 late 40-year-old men decide they're going to do a webinar, because I've had some big issues with sharing slides. So I appreciate George and Dan and Ellis to letting me know in the chat room that I haven't got the slides happening. So keep doing that for me. But I think I am sharing the correct slide at the moment, which is boosting cash flow for employers.
Yeah.
Look, the other thing, we have had a question from Sean, Jason. We should have touched on this, but there was a lot of confusion going back to the job seeker. Do we know what the 30% downturn period refers to yet?
Yeah, so we don't. The short answer is no, we don't. As I mentioned before, what we do know is we've got to understand the motivation and the incentive behind the government for introducing it. My expectation and our read of the cards, or the read of the tea leaves, if you like, is it's going to be a month-by-month basis. So if April is less than March, and what the tax office has said is register your intent if your income has dropped by 30%, or you can foresee it dropping by 30%. And so that's all we know at the moment. But I'm confident once legislation is passed and there's a bit more direction, and the ATO, the tax office, have interpreted it, we'll get some clarity around that in a week or so.
Right, okay.
But in relation to the boost, that was the boosting cash flow for employers. That was the first stimulus package that the government announced, and then so originally it was a maximum of $25,000 this quarter and another $25,000 next. They then increased it to $50,000 and $50,000. So it's the government loves the lingo, so it's called the boost. So how it works is there's boost 1 and boost 2, right? It's like a bit of boosting. Janine Ellis would love this, right? It's really helping her brand. So the boost is, the first boost it takes place in this current financial year that we're in, and it depends on whether you are a monthly withholder of PAYG, or the old group tax, withholding tax, or a quarterly withholder of withholding tax. And essentially, you are afforded a credit by the government on your BAS statement or instalment activity statement. And if you have not submitted or not remitting any GST, you'll get that refunded. So the long and the short of it is this, that the government, prior to the JobKeeper payment that we spoke to earlier, the government announced an incentive to say, hey, we really want you to do your very best to keep employing your employees or your staff or your team members, and we'll shoulder part of the load by relieving you or releasing you from your withholding tax obligation. So you're, in short, in essence, only paying the net amount. Does that make sense?
It does. Yeah. There's no cash in your pocket because you're still owing GST, right?
No, well, remember, Jay, some businesses don't remit GST. So there's some businesses that are in a GST-free environment or an import tax environment, and there's also some businesses whose revenue has gone to zero, right? Yeah. So there are instances, for the most part, it'll be a credit, as I mentioned, on your instalment activity statement or your BAS statement, but there'll be some businesses that will actually receive the refund. The maximum is $50,000 in the first period, and then that's called Boost 1. And whatever you are eligible for in the first boost, you'll be eligible for in the second boost. So if you're eligible for $50,000 in the first boost, you'll pick up another $50,000 in the second boost, which is post June 30, when we lodge our BAS statements or instalment activity statements next financial year. I think the key here, and Bruce mentioned it earlier, the key here is to arm yourself with as much information as you possibly can, like we're trying to offer today, and then speak with your advisor, whether it's your accountant or some of our clients have got pretty top-notch bookkeepers. Get in touch with those people that administer this process for you, because there are some nuances, particularly the difference between a monthly remitter and a quarterly remitter.
Right. Yeah, and I think just on that point, Jason, and again, something that certain businesses may want to clarify with their bookkeeper or advisor is that my understanding from looking at the tax office website is that you actually have to have lodged your 2019 income tax return. Generally speaking, you have to be up to date with your BASs as well. So
absolutely.
So given that there's a little bit of time this month before that payment's due, if you're behind in those, really have a look at that aspect.
There's one other point that I want to raise, which is really important, and appreciate you sharing that with us, Bruce. There are 7 conditions that have been released in relation to the boosting cash flow, right? 7 conditions. The 7th condition is what they call the integrity measures. Now, there's been a lot of chatter and a lot of talk going around. Oh, gee, I better pay myself more wages. I better do this, or I've never paid myself a wage before because I've got a trust and I receive a distribution of my income. I better put myself on wages. I'm telling you right now, there's a section of the Income Tax Assessment Act called Part 4A, and Part 4A talks about, it's an all-capturing thing where if you undertake a scheme to avoid tax or whatever, the tax office is going to belch you. I'm telling you now, these integrity measures are right there. I would not be trying to defraud the government or the tax office and artificially increase my wages or bring my wife onto the books and she's never been on the books before. You've really got to watch yourself in this instance. And unfortunately, a lot of these incentives that the stimulus packages have been provided by the government, unfortunately, some people are going to miss out.
Yeah.
And the last thing you want to do is manipulate and try and take advantage of this situation, because you will get caught.
Yeah.
I just wanted to share that. It's prudent upon us to share that information, because the last thing we want is for people to, come undone.
Well, I'm glad you did, Jason, because I have heard a lot of people talking about doing that, where they're going to put up their salaries, they're going to put the wife on the salary, all those sorts of things.
Yeah. Bruce touched on it, right? So you've got to be what they call a compliant taxpayer. You've got to have your tax returns up to date. You've got to be submitting your BAS statements and your instalment activity statements on time. The major measure with the JobKeeper payment that we spoke about before was that single touch payroll. So you've got to be participant in that. But in this one here, if you're not up to date or you're behind, you need to get yourself up to date so that you can participate in this.
Yeah,
and I think the only other point there, Jason, for people on the call to bear in mind is that, again, if you've got outstanding tax debts, then you still might be eligible for this $50,000 in phase 1 and phase 2, but you may not actually get a refund as such. It will simply reduce the indebtedness to the tax office. And so when you're looking at your cash flow planning, understand that. It's a really important piece to understand.
Yeah. And the government has also made a lot of noise, Bruce, around that whole tax deferral program. So if you've got outstanding tax debts, and you did touch on a little bit earlier, to get in contact with the tax office, or I would do it via your tax agent. I mean, this is a tax agent speaking, obviously, but I would do it via your tax agent to have conversations with the tax office, because they are, albeit they are doing it on a case-by-case basis, but we've found over the last 2 weeks that the tax office has been quite friendly.
Yeah, right, guys, we'll keep moving along. We've got the results in from the JobKeeper poll, which was, if you own a business, have you registered with the ATO for the JobKeeper allowance? 78% of the attendees who own a business have. 25% haven't.
Wow. Yep.
I don't know why those numbers aren't quite right, but that's what it's saying. So I've just shared those results. So look, we do have a question. I'm going to come back to that shortly. We might just keep moving this along here. So we've done that. All right, so we should have the instant asset write-off. Can I get your thoughts on that? You're both accountants. I know you do have some thoughts on it, Bruce and Jason. Bruce, if you want to tell us what you're thinking and a brief overview of how the instant asset write-off works.
Oh, look, I think there will be certain businesses that take advantage of that very much so. And, you know, I think we're certainly looking at how we can take advantage of it. So I certainly see that that will be the case. I guess the issue for certain businesses, particularly the SMEs, will be, do they actually have the cash, or can they otherwise get the loan to take advantage of these instant asset write-offs? So I think that will be the key. And I think the other thing is there's only a small window that this is really going to apply for. So if you're really going to look at it as a business owner, you've got to really sort of look at that strategy quite quickly.
Yeah, my thoughts, my two bobs worth for what it's worth is that this is our 23rd year in business, and every year we've talked to our clients about tax planning, and we're telling them now, never before has tax planning been so pertinent than it is right now today. And typically tax planning looked a whole lot different in prior years. This year it looks at, you know, not only how much tax you're going to pay, but can, as Bruce alluded to, can you participate in something like this? And I've always said to my clients, never spend $1 just to get a tax deduction. It doesn't make sense. You wouldn't spend 100 grand just to get a tax deduction. But in these times where we are right now, the planning for the next 6 months and then the subsequent 12 and 24 months is mission critical. I'd be looking at my revenues in, so my cash flow in and my cash flow out, and I'd be looking at how do I want to redefine and re-engineer my business to get me in a position where we pop out the other side and we can really capitalize on the new world that we're about to enter. You know, we've gone through the farming age, the industrial age, you know, the technology age. Now this is going to be a new age that we're going to walk into. So am I going to be ready for that? And if so, if I need to change the infrastructure or the equipment that I'm using, how can I take advantage of what's on offer from the government, pick up a tax deduction this year? Because a lot of businesses have made a profit up until now. Now it's about extrapolating that out, and what does the 12 months look like? How much instalment tax have I paid? What does the world look like for me? And, you know, some people might have just broken even and then they might run at a loss, which then they could carry forward that loss to next year. So the planning piece, not just from a cash flow, but from a tax perspective, is pertinent.
And I think the only other point there, Jason, is that there's certain, I guess, suppliers that are doing it tough themselves at the moment. So if, depending on your business and what kind of asset you're looking for, you may be able to get quite a good deal at the moment. And if in getting that good deal, you can also get this instant asset write-off, and you needed that asset anyway, then it makes perfect sense to consider it.
Yeah, absolutely.
Yeah. Okay. All right, guys. Look, that's great. Now, look, we do have a couple of questions that I do want to answer.
Yeah.
One question we have is, what if you take weekly draws from your business, not a trust, and then you pay the PAYG when doing the annual tax returns? Can we change to being on the payroll starting, say, 1st of January 2020?
So what the tax office, or what the noise is around there is it looks at consistency of behaviour. So I always go down to that point number 7 I spoke about, the integrity measures. It looks at consistency of behaviour. So if you had a business and you've done that for the last 5 or 6 or 7 years and it's been quite consistent and that's how you've behaved, then it looks like that you will become eligible. But the truth of the matter is we won't know until next week once it's been passed through legislation. But I wouldn't be you know, backdated to the 1st of January or whatever. It looks at that consistency of behaviour across the course of business.
Okay, thanks. Thanks, James. Look, we've got another question here. If you're up to date with your quarterly activity statements, but not the 2019 return, will the stimulus still be available? Now, that's a question I have because 2019 returns aren't due yet.
That's right. Yeah, that's right. So my understanding again, and we haven't lodged ours either. My understanding, this is what happens when you're a tax agent. Yours is always the last to be lodged. But my understanding is if you're up to date, that you still will be eligible. But again, unfortunately, we will find out next week once it gets passed through Parliament. Legislation is created, and then the next step is the tax office need to interpret it. The ATO is the biggest revenue collection arm of the government, and so you know, once they interpret the message from the PM's office and the Treasurer's office, once they interpret that, then we'll know. And so if they say you've got to lodge in 19, there's going to be a mad rush of 2019 tax returns getting lodged, I would have thought.
Okay, thanks, Jason.
You're welcome, mate.
All right. So look, let's keep moving along. The apprenticeship scheme.
Yeah, it's a good one. I think it's a really good one. It's an easy one. It's the most simplest one to understand.
Great.
And what it is again, the government, think about their incentive and what they're trying to do. They're trying to keep young kids in a job. And usually when business is tough, it's, last in, first out sort of thing. And so what the government's offering is a subsidy for apprentices or trainees up to 50% of their wage. And it's for a 9-month period. So starting 1 Jan to 30 of September. And the maximum payment is 21 grand per employee, which is 7 grand a quarter. So there's 3 quarters there in the calendar year. It's 7 grand a quarter up to a maximum of 21,000. So I think it's a really good incentive from the government. And if you've got apprentices or you've got trainees, you've got to be speaking with your accountant and you've got to jump onto that as soon as you can.
Okay, look, excellent. That's great. So look, let's touch on now. I just shared the results for the JobKeeper poll results. We've got a few other polls coming up. Let's take a look at the temporary early release of superannuation. Now, I'd like both your thoughts on this. It looks like there's a few super funds that are a little bit nervous about a run on of super, and now the government might have got wrong how many people were going to draw down on it. Can you give us a brief overview, Jason and Bruce, and maybe your thoughts on whether businesses who are eligible for it should be doing it, or is it last resort?
You want to take this, Bruce, or you want
I'm happy for you to have a crack, and then I'll provide my thoughts.
Okay, so like all good accountants, Bruce, we'll start with a disclaimer. This is not personalised advice. This is a general thing, and I'm not a financial planner, and blah blah blah, blah blah blah. I would be saying to, and our business, the position our firm, the practice has taken, we have our own financial services arm, and one of my partners, Matt Morrison, is our advisor, or the head advisor in our business. And the stance we're taking is we consider this to be a last resort option, okay, is point number one. There's some rules around it. If you've lost your job or your hours or your income has dropped by 20%, then you become eligible for it. Which is great. Superannuation is an interesting notion, and the first thing I always say to my clients is I consider superannuation as a tax environment. Okay, and so you can invest in today's world. You can invest your wealth in super, in shares, property, whatever it is. Very similar you can do outside of super, except it's a concessionally taxed environment. Typically, why we have super is to put money away for a rainy day. And so the best course of action usually is to leave it there for when the rainy day happens down the track. The issue we're faced with is it's a freaking rainy day right now, and it's raining all over the place. So if you are needing to pay your rent, if you are needing to eat and feed your family, then it would be an option that I definitely would consider, because there's no use having your super sitting there till you're 75 or 80 if you're not going to make it that long. Now, I don't mean to be dramatic or anything like that, but I think that needs to be considered. Now, if you couple this early release of super with some of the other incentives, and I know we're going to talk about it in a minute, which talks about what the banks are offering us, but I think it's pertinent to raise it now. If some people go, oh God, I want to access 10 grand this financial year and 10 grand next financial year. I want to access that because I've got to pay my mortgage. Well, you don't necessarily have to do that, because the banks are being quite lenient and are giving us a 6-month holiday period on the interest on our home loans. Now, when we say holiday, they're capitalising that interest, and we'll have to eventually pay it back, but we don't have to cash flow fund it now. So what I would be doing is doing my planning, and I'd do my plan for the next 6 months and say, okay, what revenue can I expect to earn? What expenses will I be pushing out before I start to look at a decision as to whether I'd take early access of my superannuation? If you can avoid doing it, my recommendation would be that you would avoid doing it. But as a last resort, as I said, mate, you've got to feed your family. If you've got to feed your family, you've got to feed your family.
Yeah. And look, just on that, we've had a poll pop up, and I do want to make, I think it says it is anonymous, but I do want to make clear that the polling results, that whoever's polling it is anonymous. So one of the questions is, have you requested deferred mortgage payments for your business finance or mortgage finance? And at the moment, 64% of people haven't.
Yeah.
So, something, if, and the earlier poll showed that 88% of people were expecting a drop in their revenue. So that's something to take advantage of. It's the stories I'm hearing is, look, some of the banks are really difficult to deal with, some of them aren't. It's been a pretty smooth process.
But Jason, just on that point, and it really goes to the other Jason's comments, it should be a last resort. And bear in mind that for a lot of sort of businesses or individuals, there's deferrals, as Jason said, on mortgage payments, but also, arrangements on credit cards. The ATO, you can approach for payment plans. Rent, I think, is something that really we're going to see more on, but I think it's pretty much set in stone that you're not going to be able to evict over this next 6 months period. So, and given that a lot of people's superannuation balances would have been knocked around by the current sort of equities market sort of reductions, I think it should be an absolute last resort, and also understand that it's not just going to be apply for it today and get it next week. It's probably going to be some level of time before you get it anyway. So
particularly if you're with a retail fund or an industry fund, they're not not that quick to hand out the money.
No.
Can I just give you another thing that I've seen circling the traps? There's a movement where I don't know where it started, but there was some talk around, hey, let's take advantage of this early release of super. And there's some, let's call them advisors out there that are saying, hey, business owners, what you should do is put 10 grand into super now, pick up a tax deduction, and then pull it out before June 30, and then do the same thing again next financial year, right? And I'm telling you again, item number 7, the integrity measures. If you're doing that, expect a phone call from the tax office. That's all I'm saying. So I just want to quash that, because there's some people out there that go, oh, look, I'm smarter. I worked out a way to beat the system, right? Well, no, you haven't, because I'm telling you the tax office is already aware of schemes like that. So
yes, they should.
And if you're getting advice from people that are telling you schemes like that, I probably wouldn't listen to that advice. And I think today, in today's society, particularly us as Australians, and without trying to sound too patriotic, we don't do that. We a few weeks back, we lost our shit, and I apologise for the French, but we did lose our mind in the supermarkets, and we became selfish and me. I think the wave has moved now, and we're all in this together. How can we help each other out? And we just don't do that. Yeah.
Guys, we're at the I've just stopped sharing a screen accidentally, but we're at the quick Q&A end of the session. We've got a couple of polls left, so that poll, I'm just going to stop sharing the results on that now. So we look, if there's any, I want to try and wrap it up now. I wanted to keep it to around that 45-minute mark. What have we got? One more poll left.
Grace, while you're looking at those questions, if I could just share just some thoughts about where we're at as a business community, and I think it's really important for us to understand that we're in this together. And what I mean by that is that never before has there been an opportunity for us to re-engineer our businesses and change the way we do things. As pertinent as it is right now. And what I do know about mankind and human nature is that we are quite adaptable. Right? And, if you think back to 3 weeks ago and you go, oh my God, how am I going to survive? How are we going to do this? What's happening? We're just finding ways to survive, and we've got to finding ways to adapt. We talk about you off the top. You spoke about working from home and never spent this much time before with your wife and your teenage boys and all that sort of stuff. I saw a quote. There's a lot of memes that come up now. that we're seeing around COVID-19 and the Corona world and all that sort of stuff. And I saw a meme that spoke about, you got to work from home for 4 weeks. Have a think about Anne Frank, who spent 800 days in an attic. Do you know what I mean? And we will adapt. And I hear conversations, our kids, how are they going to survive? Well, guess what? Kids are so much more adaptable than the 3 of us or the 100 of us that are on this webinar. And so we can learn from our kids. And, we in our organisation, we've got a team of nearly 60 in our business. There's 10 of us in Sydney and 50 of us in downtown sunny Melbourne town. and we started to have conversations about, will our guys be doing the right thing, working remotely, and how are we going to make sure that they achieve their outputs and all that sort of stuff? Well, blow me down if we haven't been more efficient and more effective.
Yeah.
Right now, our guys are really, the cream's really rising to the surface now, and we have no option but, right? We have no option but to survive. We, as you mentioned, Jace, the time is now, the present. We're going to focus on the present.
Yeah.
Which is what we're doing. But also in the back of our mind, and Bruce will be all over this, particularly with what he does for a job, is we also need to think about the future as well. And what we've got to do is we've got to speak to the people that we are connected with. We've got to speak to our accountant. We've got to speak to our mortgage broker. We've got to speak to the tax office. We've got to speak to the lenders. We've got to speak to our landlords. We've got to speak to our suppliers, and we've got to speak to our team. And we're going to have, I get a lot of questions. Can I stand someone down? Can I lay them off? Can I do this? What can I do? Under what circumstance can I, make someone redundant? All that sort of stuff. The first thing is to have the conversations with your team members, right? And because you know what? They're just as frightened about their job security as you are about your business. And the more conversations we're having, and I guess this is what Scott Morrison is trying to allude to with the boost for businesses, being that PAYG credit, and also the JobKeeper payment, it's like, come on, man, let's work together. Let's just live through this 6 months, and we will, because as Australians as a country, we punch above our weight, right? We do it at the Olympics, we do it in sport, we do it in everything. We punch well above our weight. And as crazy as this sounds, this is going to be good for us.
Yeah.
It's going to be good for us.
Yeah. Look, we're all adapting, and we're focusing on, Christ, if somebody said to me, I have to work from home every day of the week, I'm 2 weeks, and I'm adapting to meals, breakfast, lunch, and dinner with my wonderful family, and walking the dog at lunchtime, and getting back into the office and ripping into it. Look, we do have a few questions to answer before we finish up. And look, one thing I didn't do, somehow the SME guarantee scheme hasn't been talked about. Now, so this is the banks who are giving they've been guaranteed 50% from the government to lend money to SMEs up to $250,000 over a 3-year period. There's been a lot of confusion around it. I know I've heard some bankers that just get calls from small businesses saying, I'd like my $250,000 guarantee.
Can you send some my way too, mate?
Yeah. And look, that's not how it works. Now, we've got a poll going at the moment where it's have you apply for the unsecured business loan through your bank or other lenders. And only 13% of the people who have, and 88% at the moment, are saying that they haven't. So, look, that
surprises me, right? We've applied for it in our business. We, I don't know whether, I doubt very much whether we'll use it, but we applied for it. Why wouldn't you? So the thing about the loan is it's a 3-year loan, 50% guaranteed by the government. It's not asset backed. It's backed by, and Bruce will be more averse to this than I, but you don't have to put up your house as security. You put your business up as security. There'll still be a personal guarantee though. Don't worry about that. The banks aren't just handing out $250,000 just to anyone. But why wouldn't you get access to it?
Yeah.
You don't have to draw down the loan, right? But if you've got the money sitting there waiting and you can get access to the money, why wouldn't you? Particularly if it's a 6-month interest-free period. Again, when we talk about interest-free, there's every chance that some banks are capitalising that interest. Some banks are actually taking the interest out of the $250 and giving you the balance.
Right.
So we need to just think about that. But what I would be doing is I'd speak to my mortgage broker.
Yeah.
That's the first thing I'd do. I'd speak to my mortgage broker, and then I would work with my accountant or my business advisor and start to plan what the next 6 months looks like and the next 12 to 18 months looks like. And I'd have that cash flow sitting there waiting. I'd work out how much of my own money do I need to contribute into my business. And Bruce probably would also understand that there are some businesses, unfortunately, and I don't mean to sound pragmatic because I'm actually quite empathetic towards these businesses, but there's some businesses that chances are not going to make it through.
And I think I think, Jason, just on that point, you are right. There will be some, but I would say some of those that won't make it through were probably delicately placed going into COVID anyway.
That's quite politically correct there, delicately placed.
Yeah, that's really well said there.
Yeah.
You could also say, yeah, they're rooted before they started or something else. Yeah. But look, so look, I want to answer a few questions. Now, look, I'm getting that SME guarantee scheme. I'm all over that. I've had to change my business model. I'm essentially an asset finance broker and debtor finance broker, but we're just all over the SME guarantee scheme because that's where my calls are coming from clients, potential clients. And
how is it going to be for them to get it, Jason?
Well, mate, it's how hard is it going to be?
How easy?
No, it's not going to be easy at all because let's face it, we're dealing with banks. I haven't got any banks that are listening to my webinar. So, you're dealing with banks and there's stuff. I've talked to clients that have business bankers and, they're not returning their phone calls. They don't know what's going on. So I've got a question here about which non-bank lenders will be providing this credit to apply through. I know a few non-bank lenders who are trying to get, approved for this, and it's proving very difficult. So the banks are notoriously difficult to deal with. Like Jason said, talk to your broker, your mortgage broker, your finance broker.
You're still going to have a business case, Jace, right?
Still going to have a business case.
There's still going to be a business case, right? And I wrote a book about planning. I'm all about planning, and some would say I plan too much, right? But you've got to have a business case. You can't. We're not rolling the dice here, mate. It's have a business case. They'll assess it on. My understanding is they'll assess it on 19 financials. And then interims up to sort of February or March. You've got to have a business case, and the last thing you want to do is borrow money, Bruce, that you can't repay. I think that's really important.
So look, I've got a couple more questions before we wrap it up. So look, like Jason has said, you do need a business case. So look, if you've got tax debt or you can't show serviceability, even though they're relaxing, the responsible lending criteria, they're not going to, and the government's guaranteeing 50% of it. They're not going to throw it out like there's no tomorrow.
And Jason, that's really the key. Is a lot of these measures were designed to help viable businesses that went into COVID continue to be viable coming out of it.
Yeah, that's right. So look, what I want to do is I want to answer a few questions and then we'll finish it off. So I've had a few in the chat room about, look, does the loan apply to ABN holders? My understanding is that it does. So if you're a sole trader, you're still eligible for this SME guaranteed loan.
Yeah, absolutely. So a business is a business if it's got an ABN, right? So an ABN, you don't have to be a company or a trust or a unit trust or a discretionary trust. You can be a sole trader as a business.
Yeah, and look, the loans, the loans are available now. The banks are doing them. I don't know if there's been the first one done yet or not, but we've got quite a few submissions in for our clients. Seeing how we go with that. Last couple of questions: which non-bank lenders will be providing this credit to apply through? It's a moving target. I'm not aware of any non-bank lenders yet, but they have to talk to Treasury and get approved. So that's happening at the moment. If you have a business case, why do you go through the non-bank lenders? Well, you wouldn't go through the non-bank lenders. If you've got a business case, the best place to go is your current bank. That's where you want to go. Is that what you're doing, Jason? You're dealing with your current bank?
Yeah. So we Macquarie are our financiers, and so we spoke to our business banker straight away and got the wheels in motion. We asked them to tighten up a few things and on their interest rates, which was interesting. We've got that all happening.
And so just there's a question there about who do you go through for non-bank lenders yet? So I misread that question. We're not really sure yet, but I've got a lot of information on my website about this. So we plan on putting which banks are participating, and we can assist with all that stuff. We've got another question here from Simon, and then we'll finish it off. Definition of full-time employment: director not paid on a weekly basis. However, the director makes salary sacrifice contributions plus the company is assessed for FBT on assets used by the employee director. Will this meet the full part-time employee definition, hence eligible for JobKeeper?
Yeah, good question. I'll answer it in two parts if I can. The first part, I spoke earlier about the consistency of behaviour. So if that's happened for the last 5 or 6 years, and that director, rather than taking a director's salaries, he or she chooses to salary sacrifice those wages and put them into the superannuation, and there's an FBT piece. My understanding of the interpretation where it is at now would be that they would be eligible. However, we don't know yet because Parliament hasn't met, legislation hasn't been created, and it has not been interpreted by the tax office. So if I was that person or the client of that person, whatever, I would still register with the tax office. But also remember that the eligibility criteria starts with the employer, not the employee. And if the employer does not experience a downturn in their revenue of 30% or more as a result of COVID-19, then they're out. Does that make sense?
It does.
So if you've got a business, right, and you take a 20% drop in your revenue, you don't qualify, unfortunately, as it stands at the moment. Now, as Bruce alluded to about 10 or 15 minutes ago, there is no doubt that there are going to be more stimulus packages announced. I suspect that we'll hear something on Sunday night. I suspect that there's got to be something coming in relation to landlords, right? There's got to be some relief provided for landlords so that they could then pass on some relief to tenants. There's businesses out there. We act for a lot of businesses in the hospitality space. A good mate of mine I played footy with a long time ago. He's got 3 pubs. Revenue has gone from 100% to 0, 100 to 0, right? So he's still got to pay his rent. He's trying to negotiate with the landlord, and the landlord's going, oh, I don't know. One landlord's thinking that he might let him defer it, and everyone's sort of just avoiding that issue. But he's still got to pay out a lot of his employees, and and people go, well, he's accumulated. They've got annual leave. He can pay out the annual leave. That's great to have annual leave accrued on the balance sheet. You've got to have the cash in the bin to be able to pay it out to them. You know what I mean? And so they're in a spot of bother. So I suspect something's going to come there, and I suspect that you'll find, like with the cash flow boost, it was 25,000 and 25,000. They increased it to 50 and 50. So my expectation, my suspicion is, remember that and I'm not trying to provide a political view, but remember we have a Liberal federal government, and so the Liberal federal government will incentivise the business to continue on. So I think we need to think about that as well.
So look, guys, I think we'll wrap it up there. That's about it for the questions and answers. Look, it's been great catching up with you guys. For everyone, we've still got a lot of people in on this call, on this webinar. It has been recorded. I will get it emailed out to you. Look, if you don't know how to save the chat room, I've got my landing page in the chat room. You click on the 3 dots and go save chat, and you'll have a link to the landing page where we've got all this information we've discussed on COVID-19.
Jason, can I just make 2 quick points in closing?
Yep.
Everybody's sort of in this together, and please make sure you look after your own mental health, firstly, and secondly, please be aware of all the scams and all of the misinformation that's out there, and try and turn the noise down a little bit and just rely on, as best you can, reliable information sources.
Yeah. No, look, absolutely. Thanks for your time, Jason Cunningham. Thank you for your time, Bruce Gleeson. I am going to, it's been great to put a jacket on and a shirt and shoes. I'm wearing shoes for the first time at home in a little while. I thought I'd go the whole rather than shorts like Jason Cunningham has done. I'm going to have a Poets Day because it's, if you don't know what a Poets Day is, private message me and I'll tell you, but I'm having a Poets Day because it's my birthday today.
Hey!
Birthday!
I turned 48 today, and so I'm not going to go out to the pub or the restaurant or the club. I'm going to go for a cycle.
Excellent.
Good on you, mate. Happy birthday, pal. It's always a good day when it's your birthday, mate.
Yeah, that's right. So, guys, look, thank you, Jason Cunningham. Thank you, Bruce Gleeson.
Thank you.
Thanks everybody for attending. I hope you enjoyed it. 3 blokes in their late 40s trying to use technology. I think have done okay, and I'll see you next time.